Good afternoon. Equities, fixed income, currencies, and of course commodities. This is Markets Today. Coming in live from Nairobi, it's me, George Bodo, co-hosting this with Mbide Mwema. We have a lot of discussion lines up. We are also following some top of the news. But top of the line is we're looking at the market close. Market is about to close in just about 28 minutes. So far, Safaricom's dominating trades. It's about 2.4 million shares traded. Market looking a bit flat. Just about 190 million shillings in turnover, largely unchanged from yesterday. It's likely to be, market likely to cross at yesterday's levels in terms of total trades. Some of the top news is we are following is FX market, a bit of stability today. Kenya shilling up, range bound against the US dollar, just about 102.9 against 103. That's bid offer, largely unchanged. We're likely to see a bit of stability on that front, but the question is whether this is the new level, whether we're likely to go back to 101, where we were about a month or 2 months ago. Let's wait and see. We're also following some news on the real estate market, a bit of turbulence in the market. Well, we just woke up to some news that, one of the banks is auctioning a very big apartment. Well, but this is probably a sign of a distress in the market. And talking about this, this is the third breaking bad news about the real estate market. The first time was that the Revenue Authority was saying stamp duty revenues were down. The second news was that Nairobi building plans approvals were down. And now one of the banks is taking over a huge real estate complex.
The real estate the complex is somewhere along Athi River?
Yeah.
Just after the...
Yeah, it's 30 kilometers from Nairobi.
Yes, it's 30 kilometers.
It's very far from
But
Nairobi.
I think maybe that one has just been there for a very long while. Maybe if we can just isolate it. That one, I think the issue has been the owner was unable to sell. And I've been around that area, and the issue was not the debt that had actually been allocated. The issue was the location. It's perceived to be in a swampy area, so the uptake and the offtake has not been as robust. But that said, there's certainly a slowdown when it comes to real estate. It's one of the stories that
keep on underlying.
It keeps on coming, and affordable housing will also have an impact on the offtake prices. So if you're sitting on some of these assets as the banks, then even though it's not the issue of NPLs, then you have to find a way to restructure the debt facilities to some of these development companies.
Yeah, and we sat here with one of the analysts, real estate analysts, and she said the commercial market oversupply to the extent of 5.2 million square feet.
Oversupply in that
real estate market is looking a bit...
Go to Ruiru. Stop insisting Nairobi.
Yeah, I think you're right. But some of the news also following is the central bank governor, for the third time yesterday, he made a strong case for regulation of mobile lenders. And I think they're working on something. From the tone, the posture, the texture, what keeps saying, I think they're working on regulations. Do you have an idea how the regulation should look like? Should they be told to put up capital?
Bottom line, if you do not have a license, what they're trying to say is you have absolutely no business extending credit in this market. I don't know if there's an opportunity up until maybe before now. There could have been an opportunity for some of these smaller houses to be taken up by the bigger houses, because for KCB they had an internal department that was trying to replicate what the likes of Tala and Branch are doing. But now that the regulation is there, I don't know if there's still that opportunity for acquisition. But then certainly the likes of Tala and Branch have to review their business models in this part of the world. Yeah,
I mean, just to keep our viewers updated, is that the Central Bank of Kenya governor has made a very strong case for the regulation of mobile digital lenders. And the case here is that, it's all about the conduct, the pricing, the debt recovery tactics. Well, they kind of touched on some nerves, and Parliament has picked it. It's just a question of when you regulate this, will you curtail their business?
Let me just flip that question and say, we've been also talking about Nigeria. So it's interesting, the regulation that's been done in Nigeria is more for the banks and finding a way to ensure that they extend credit. But then it's the reverse in Kenya. The regulation is stopping those people who are allowing people to access credit to stop extending credit because they do not have the requisite licenses. So I think maybe the question here is, are we getting to a space where you're over-regulating and addressing the wrong symptoms? Because really the symptoms that we need to face today are either remove the rate cap ceiling or review it so that credit can be extended. And even though you remove it, the credit extension will not be as fast because the economy is weak. But then you going to the lender lenders who are actually extending credit to the bulk of the population that don't have access to work opportunities but are using this credit for a day-to-day basis. In a way, you're shooting yourself in the foot. But again, I am not the learned person here. I think it's just a watch and see, but it's just interesting to see the different perspectives that regulation can play in terms of hindering growth or being a source of access to credit in the different markets.
I think you make a very important point that regulatory risks actually rising across sub-Saharan Africa. And talking about regulatory risks, yesterday, some developments out of Tanzania yesterday, the Bank of Tanzania, which is the country's central bank, fined Diamond Trust Bank for failing to have an in-country data center. And the Bank of Tanzania, the same bank, fired a CEO of a bank, Tanzania Investment Bank. And across West Africa, the Central Bank of Nigeria, when fed up with banks not lending, apparently, has come up with a draft guidelines, say minimum loan to deposit ratio should be 60%. That means that if you're below 60%, you're gonna have to move it up to 60%. There are two ways to do it. It's reduce the deposit, return the deposit's money, or lend.
Exactly.
Yes. And we're likely to see more regulation, even in Kenya here, apart from the Central Bank of Governor proposing regulations for mobile digital lenders.
The regulatory risk is everywhere.
The Minister of Interior has suspended pay bills for, mobile wallet accounts for the betting companies. It's always very tricky when the government intervenes in businesses, right?
Regulatory risk, I think it's becoming an emergent problem in Africa. So you have the first thing, political risk, then the next thing, regulatory risk. And then you keep investing in this market. Some of the stocks are illiquid. FX risk is also an emergent problem. So I guess the question is, does it make sense to keep investing in the last frontier for another decade?
It's a bit of a,
the returns are not matching, but then the risks are getting higher and higher. The level of risks are getting considerably higher. But I'm very curious to see later on in our conversation on telcos if that's an emergent problem in that sector.
The telco actually is not even spared because there's a bill, Kenya Information Communications Amendment Act 2019.
Everywhere.
We're going to discuss it shortly with Tracy Kivunyu, who's a senior analyst at Telema, shortly after the break.